Hello, my name is Tom, and today I'm going to show you how to write off a bad debt in Xero accounting software. First of all, a bad debt is an invoice that you've issued to a customer that you have pursued, and it is highly unlikely or confirmed that you are no longer going to be able to expect payment of that invoice. And ultimately the goal is to remove that invoice from your system without effectively treating it as income or having it affect your profit on your accounting software. So to do this, the first thing you need to do is have a look at your chart of accounts by going to Accounting, Chart of Accounts. Once in the chart of accounts, the first thing you need to do is confirm that you actually have a bad debt account set up in your system. And as you can see here, we do have the bad debt account set up. Importantly, you do need to confirm the bad debt account does have GST flagged as a GST on expense if you are registered for GST. If you are not registered for GST, then this should be a BAS excluded tax rate on the account. But with ours, this is correctly set up, so we're able to prepare that bad debt. So to do this, we first need to work out what that bad debt is. So we're going to go to Business and Invoices, and our scenario is going to be that under awaiting payment, we have Bayside Club who owe us $3,200. Now, this debt's been pursued, and we've made the decision that it's highly unlikely, if ever, that this debt will be paid. So we're going to bad debt this. So in order to do that, we need to go to the top in the invoice section and create a new credit note. In here, we need to select the person that we issued the original invoice to, which was the Bayside Club. This is important because what that does is it then drags those invoices in to work out which invoice we're going to bad debt. The date we will bad debt this will be today's date, and we need to fill out some details down the bottom here. So in here you will make this reference to the specific invoice, so it might be invoice 1234, client is unwilling to pay debt despite legal action taken. The quantity will be 1, and then you need to put the full amount of the invoice in the unit price. So this invoice was $3,200. Importantly, it needs to go to the bad debt account. You can see it automatically picks up the GST on this account as well. Okay, but as we know, the debt was actually $3,200 in its entirety, so we do need to adjust this to be tax inclusive, which now makes the total invoice $3,200. Now that we've done this, we can approve this credit note. Because we linked the client to that credit note, it has produced the invoices that are currently outstanding with this client, and we can see the one in question is here for $3,200, and we are going to apply a $3,200 credit to this account, specifically against that invoice, and allocate the credit. And we've now applied that credit, and as you can see, it's been applied against the invoice we just spoke about. What this has now done has receipted the income as if the money has been received from the client, but importantly, it's allocated that payment to the expense account, being bad debts, to effectively net each other off and have a nil effect on your profit and loss for your business. So when it comes time to prepare your BAS, you will see $3,200 showing up as income within your GST on income, but you will also see an expense show up in the bad debt account for $3,200 and the GST treated on that. Ultimately, one offsets the other and neutralizes the overall transaction as if it's never happened. That is how we allocate a bad debt in Xero. If you would like detailed Xero training, or you just want a better business accountant, please contact Jeffkins Accountancy and Business Solutions. Thank you.